Hi, this is Pat Moorhead with More Insights and Strategy, and we are here for another awesome FinTech Friday episode. And we are here with Principal Analyst of FinTech, Melody Brew. How are you, Mel?
Doing great. How are you?
Good, good. We took a little bit of a sabbatical. It's been a couple of weeks here, but life happens.
Yep. Like I said, we were dodging COVID around here, but thank God everybody's healthy.
I
Nobody
know.
nobody actually got it. Just lots of close encounters, but we're all
I
good.
know. It's crazy. I need to be reminded every once in a while that COVID is still a thing. Downtown Austin, nobody wears masks anymore, and I
Yeah.
went to visit a client today, and they were all wearing masks, and I had to dig out my mask and look for it, and I found it, but every once in a while, I need a reminder that it's still here.
Yeah, I was at an event downtown. Elevate Ventures had a really cool event just right downtown. No masks. Nobody was, all of downtown, not just in the event. Actually, there were some people in the event wearing masks, but
Yeah,
um, downtown, you forget about it. And I forget about it in the bubble here too. We're kind of, until somebody's directly exposed, it's really just, we learn to live with it, right? And everybody's going to be exposed at some point. It is what it
exactly.
is. But that's the really nice thing about having all these virtual events still as an option. Like I was saying, Money 2020 was in person only. And I think right now that's still a little bit of a mistake. Like this past week,
Yeah.
I attended a bunch of different summits, Venture Beats, Game Beat Summit, which was really interesting, really cool, and actually kind of leads into our trend of everybody wants to be a fintech, because games are now becoming, there's the fintech element to games and all of the crypto, and it's no longer pay to play; it's paid to play. It's really
Yeah, so we have a bunch of good topics. Don't jump to the
sorry.
second topic.
I
Come
was just really
on.
excited about Venture Beats Game Beats
Yeah.
Summit.
No, I know it's fun, but no, we've got a great show. But I just want to remind everybody we are talking about fintech, but please don't take this as investment advice. This is for educational and hopefully entertainment purposes only. So, with that said, let's jump right in. I mean, we're talking fintech envy, kids of Wall Street, talk a little bit about Coinbase, and then my favorite section is the acronym of the week that where you can guess that I can embarrass myself multiple times on this show. But Mel, let's jump into fintech envy. I mean, everybody is envious of other people in one way, shape, or form. It's kind of the human nature here. But what kind of envy are we talking about here with fintech envy?
I say all the time that every company wants to be a fintech, or every company is becoming a fintech. And there is this really big trend right now. And like I mentioned in gaming, there's monetization of so many things where people can actually hold their, like I don't game, although I do have a background in gaming, which might surprise you. LucasArts was one of my clients for a very
Oh,
long
cool.
time.
I didn't know that.
Yeah, I did E3 and all the things. So a little bit of a gamer, but not really. My kids game. But now you can NFTs, and instead of buying your avatar, you can own it and sell it and whatever. But anyway, that's sort of just a byproduct of this. But really, there's a huge trend right now of software companies turning into fintechs. The biggest example here, and there was a protocol article on this. I think you might have that. Toast, the restaurant software company, they reported revenues from payments and other financial services doubled this past quarter, and it rose faster than their original subscription model. So a lot of these companies like Shopify, and even we talked about Adobe on one of our last episodes, they're integrating payment processing into their offerings. And so they're not just a SaaS, or a marketplace, they are processing the payments. It gives them, they're not just charging licensing fees and subscriptions for their software service, they're able to manage the payments. So they can take a cut of that revenue. They also just have more control of the customer experience. And, it's becoming a really big trend in ways to monetize their customers beyond just that subscription service. And we're seeing it a ton. I mean, you can see like any company where you pay for something, if they're the payment facilitator, they get that money rather than having to, or they get the cut of that revenue instead of rather having to pay a payment processor to do it. So it really makes sense. It's a huge undertaking. If you are a payment facilitator, there's all of the risk with the compliance, and you have to be PCI compliant, payment card industry compliance. So there's some downside to it, but it definitely can give the companies more control, more revenue, and more of a seamless experience when you're processing a payment, instead of rather than having to move to a different platform to pay for something. It also gives them the ability to add in APIs for things like buy now, pay later, any other offerings, layer on things like, if it's like car loans, you can layer on things like insurance and all of these other things to offer companies. So it's a really cool trend. I know you cover a lot of SaaS. Are you seeing a lot of or any of this?
Well, I see insert your name, then envy, right? Over the last 30 years. I mean, web envy, e-commerce envy, app envy, there's quantum envy. Now there's AI envy. Where something is hot and a ton of VC money is going into it, there's envy. And right now there's FinTech envy. So whether you're a gaming company, a social media company, if there is some sort of correlation, a way you can even staple fintech onto anything, you're a fintech company.
Yep. Yeah.
So there we are. That's kind of my opinion on that.
It's so true. Like this event that I was at the other night, the Anthem IQ is this prop tech company, but they kind of consider themselves a fintech. It's like prop tech, insurance tech, all the tech,
Yeah.
SaaS. Everybody now wants to be fintech. It was a great time to be in the space. So yeah, and you're right. There's a ton of VC money being thrown at it.
Yeah, talk about the other one, which I'm learning too, is space, right? Doesn't matter what you do. If there's a link to space, then you're a space play. So SpaceX shooting rockets up, you make rocket fuel, you're a space play. So I love that. So let's move to the next topic here, the kids of Wall Street. So are we talking about frat boys who go and get their MBAs and become the kids of Wall Street? Is this what we're talking about here? Tell me it's not true.
No, we're not talking about that. And for some reason, the term that those guys now have is finance bro. That's what my daughter, who's 24, when she saw pictures of my two boys who are 14 and 15 dressed for cotillion and homecoming, she's like, "Oh, Mom, they look like finance bros." Like these guys
who get. I didn't even know there was a thing.
Yeah, right?
I guess there's a thing, huh?
There's a thing. Yeah. So Kids of Wall Street, well, the funny thing is, they're back to gaming again. There's a game called Wall Street Kids that simulates stock market for kids to kind of, or for people, I guess, to learn and everything. But Greenlight just introduced a new financial education for parents called Investing for Parents. Greenlight is a fintech company that helps parents to make their kids more financially aware. And so they just started this new educational investing platform that's designed for parents. I thought that this was really interesting because some of the stats that they came out with from their study found that 52% of parents don't invest because they lack the knowledge, and 58% are intimidated by investing. 88% of parents wish they had more investing education earlier in life. And more than half of parents right now have little or no savings for their children's future. So that's really scary when you think about, we're dealing with inflation, we're dealing with economic uncertainty. The best thing that we can do for our kids right now is to teach them financial literacy. And a lot of these fintech companies are doing that. There are a lot of companies that, provide education as part of their platform. But this is interesting because it's a way, it's not just, giving the education, it's a way to teach parents how to teach their children.
Okay. So I was getting confused because it sounded like something for parents, but it's the kids of Wall Street, but it's essentially for parents to teach their kids about Wall Street. Right?
Yes. And really, I mean, so there was actually a Wall Street Journal article, I think it was this past weekend, that talked about how many people are sort of skirting that traditional financial advisor. And those kind of are more the kids you were thinking about, like the, kids, guys, girls, people coming out of
Pros.
business school,
Yeah.
bros, but there are women too, who just, use Robinhood or trading apps or whatever, and they're not paying a financial advisor, they're managing their money and they're making a ton of money doing it. But it takes a lot of education to do that. And a lot of people don't have that education, and we don't get it in school. And so I think that, what Greenlight is doing is interesting. I kind of have this theory that, and this would probably will not be a popular theory, that it is better to get your kids a brokerage account than a dog.
Ooh. Ooh. Get them a brokerage account like Robinhood, right?
Yeah, or something, where they can learn. Public is great. Betterment is great. There's some robo-advising that's in there. There's a lot of companies that are doing this where you can get that education. And I think when you teach kids, so everybody says, oh, get your kid a dog, it's going to give them responsibility. Well, a dog doesn't teach you about risk. A dog doesn't teach you about, what your risk appetite is. A dog, dogs are great. Don't get me wrong. Dog hater. I'm not a dog hater. And I chose to.
We don't need to get canceled like that. Okay.
Right. Which is why I said dogs, not cats, because
Got it.
The cat people will cancel me. I happen to love both. I don't have any of them, but when you really think about it, learning those things about researching something, aligning it with your values, which a lot of millennials and kids now, they don't want to invest in something that is bad for the environment or whatever. So you're teaching them about risk. You're teaching them about aligning their actions and their money with their values. You're teaching them responsibility. And you're teaching them the importance of saving and planning and building for their future. Yes, a dog is great. You can have both, right? But really, when you think about the things that knowing your finances and having control of them will teach you, I think it's really important. And I think that I really like what they're doing with this, because it's a tool for parents who are intimidated or don't have savings or don't have the education to do it, to learn a language, to have that conversation with their kids.
Well, it is important. I mean, if you look at 50 years ago where, investing, there were different ways to invest. Okay. You might create a business, you might have a paper route, you might have a lemonade stand or something like that.
Yeah.
But, we become an electronic world, and you would expect for kids to up their game. Some of them have those that have reach, but what you said in the intro, really made a lot of sense, in that if you think you can rely on your Social Security, you're probably going to be very disappointed. And with inflation kicking up, and you and I were both alive when inflation was off the charts. My dad's highest mortgage rate was 21%. My mom's was 17%. And you can imagine that having to pay 20% of the value of your home every year to live in it. So people have to try other things. And I was trying to be funny putting up that New York Times article, but there's also investment strategies that are beyond memes, right?
Yes.
And I think that's the biggest key, which is, what is it that drives long-term growth? Is it the meme, or is it true value? And it ends up being true value.
Yep.
And I can't predict the next 50 years, given some of our society's biggest stars have absolutely no intellectual capital. It's more about kind of how they look and what they can do in a sport primarily. But I hope that true value remains the key, and kids do need to get smarter at this. So
also, when you think about there's so much this growing gig economy. People no longer have the traditional 401k that they have with their jobs, with matching, and it's a different economy in general and in the job economy. And like you said about mortgages and things, there's actually a ton of fintech companies that are kind of digitizing the mortgage industry, because home ownership is one of the biggest ways of wealth creation. And there are lots of people who are excluded from that for many, many reasons, whether it's, credit issues or like we talked about a long time ago, the weed industry, right? They're paid in cash, they can't get a mortgage. So there's a lot of solutions that are helping to solve those, and homeownership is one of them. It's important to build wealth. So having that education early on in life is really, I think, transformative.
Let's jump to the next topic here.
Yeah.
I mean, I'd love to talk about kids rolling the dice on this stuff all day. I don't even know what to call my kids anymore. Are they kids? I mean, my youngest is 19, so I guess they're kids still.
Yeah.
Let's move to Coinbase. More battles with the SEC. What is going on here?
So I use Coinbase kind of as the example here, but really all of crypto is kind of just in this battle with the SEC. Coinbase had a little bit of a wild earnings ride, and basically they kind of came out and said investors need to hold on for a wild ride because crypto it's speculative, it's volatile, it's all of these things. I looked earlier, Coinbase is up today. I mean, their stock is doing great. But they're in a huge battle with the SEC, and they're not the only ones. I think Andreessen Horowitz made some statement about SEC being outdated. Ripple's lawyer is always on Twitter, kind of declaring war on crypto. But Coinbase has actually published their vision for a digitally native federal regulator that would be dedicated solely to digital assets. So they're kind of going at this big sort of lobbying push to have their own regulators for certain aspects of the crypto industry. And, it just sort of points to kind of the disintegrating relationship between Coinbase and the SEC and others. There's just a fundamental difference in the technology of digital assets. And for a legacy regulator to be able to regulate it and transform it, a lot of these people, you're taking something that's highly regulated and adding on something that's highly technical. And a lot of these policymakers and regulators don't completely understand it. So I see from Coinbase's perspective, it's like, let's get a group of people, industry, policymakers, lawyers, whatever, people who understand it, and build the proper framework around it. So we're not having, this sort of legacy system with laws that were made 75 years ago govern a brand new asset that doesn't fall under, the same sort of securities rules that the SEC is, governing. So the interesting thing about that is Bitcoin and Ether don't fall into this proposed purview of this regulator because the SEC has already indicated that it considers Ether and Bitcoin to not be securities.
What's the difference between, I guess, Coinbase is a public security, basically a marketplace and an app. So I guess that's the difference, is that.
Well, so Coinbase is a marketplace, so they have you can buy and sell and trade other securities or other digital assets on Coinbase, but Coinbase is also a public company, so it is actually a security. So they're kind of falling under the purview of both if they're asking for this. So, what I think that this is doing, what's interesting about this is that it doesn't really address real decentralized financial protocols, because if you really have a decentralized financial system, the whole point of that is that it's decentralized, that there's nothing to regulate. So the whole thing that's why I said is Coinbase Off-Base. How I don't think a lot of people in the crypto world want to welcome regulation. That was the whole, sort of the whole point of it, is to not have to have all of the traditional regulation. It's decentralized. So I think that's interesting. I also think it's very interesting that Robinhood's chief legal officer, quote, called it one of the stupidest ideas I've heard in this space in a long time. So clearly we don't have a lot of agreement here on the different, from different fronts on whether this is needed or welcomed or what will happen. But it's crypto is everywhere now. I'm sure you just saw Staples Center is now crypto.com.
It is crazy. And I'm trying to get my head wrapped around something that has no inherent value with matter, gold,
Mhm.
silver, real estate, or something like that. I'm also trying to think through kind of beyond the nefarious uses of it, potentially a hedge against inflation.
Mhm.
I don't have diamond hands or laser eyes, so I'm not a crypto investor, but it is an interesting phenomena to watch. Uh, China shutting it down so quickly with
Mhm.
within a week was an incredible sight. Uh, Plus or minus, if you hated it or love it, it just showed the power of it to change something. Uh, whether it's our financial systems, our privacy in some way, shape, or form. It's obvious based on what China did that there's something that is there, and
Mhm.
that's very impressive.
Yeah. Yeah, I mean, I watch a lot of companies, there is some crypto envy or some blockchain envy or, just kind of this deregulated or, decentralized, all of the Ds, that there is some envy there as well. And I've watched some companies who are not involved in crypto or not involved in blockchain make announcements that they're, getting into the space. I call that cryptoing instead of instead of
Wow.
instead of dipping your toe, you're cryptoing. Anyway, um,
It took me a while to get there, but I did get there. Okay.
yeah, but then you see what happens that sometimes investors get spooked by that.
Absolutely.
There,
Absolutely.
I just saw it happen with a company that I've invested in earlier this week. I didn't invest earlier this week. A company that I'm invested in made an announcement about some blockchain capabilities and building out a platform. And whether you can, I can't exactly link it back to that, but the stock price took a little bit of a dive, and
Interesting.
I'm guessing that there's some traditional investors who are still spooked by it, and if it's off of somebody's, their main mission and their main goal and their main point of existence, it can be a distraction. There's lots of people who are really excited about it too. So that's
Let's move to the final topic here, and that is the acronym of the week, MDA. I'm sure this is the Missile Defense Agency, some psychostimulant, or something like that. What is it in relation to fintech?
So it is actually marketplace of digital assets. And I thought that that was
Seriously, people are really using this? Come on.
well, so Coinbase is using this and they're trying to make it a thing.
Okay.
And they're
So we're
lobbying.
making it a thing too.
Yeah, we're
Look at
making it a
us.
thing. I
Yeah.
mean, so there are marketplaces for digital assets. There's a lot of them, they're
Yeah.
and they're coming up. And I don't think there really is a name for it yet. But one of the things that Coinbase is lobbying to push for with this new regulator is control over of marketplace for digital assets. Again, I think it makes sense in a way that these marketplaces, they shouldn't necessarily be governed by FINRA or SEC because they're different.
Right.
And they might require, different laws, different information. There's just a huge swing in how things have happened. I had listened to a really interesting podcast on NPR, How I Built It. Do you know that podcast?
I've heard it. Yeah, for sure.
Fantastic. But they had the CEO of Robinhood, and he talked about, how Robinhood was, basically how it was built. And just the anecdotal stuff about going back to when, there were paper slips on the trading floor, and that's how trades were made. And now, their Robinhood's goal was to shave off like hundreds of milliseconds, like just the tiniest sliver of time for a trade to make it more advantageous for trading and splitting the markets. And so really, when you think about how far we've come, and like you said, you can't predict the next 50 years, but nothing's going to be the same. It's just now we're talking metaverse, we're talking all this stuff. There's got to be some change as change occurs.
Yeah, my very unscientific theory is that it takes things 3 or 4 times to get lift off.
Mm-hmm.
And if you look at tablet PCs, if you look at quantum computing, if you look at AI, I mean, AI is not new. Okay.
Mm-hmm.
We've been talking about AI since the 60s. There were AI algorithms,
Mm-hmm.
and they were there. But at some point, if the value prop is right, the timing is right, then you get liftoff. And I always like to get at those core value proposition. The whole, I'll call it composability or deconstruction of everything is the next best thing. Blockchain enables that. Decentralization of everything is in, and whether that's finance, gaming, photo sites. I see investments that Chamath is investing in a ton of these decentralized capabilities of things that we can do today centralized. So there
Mm-hmm.
is something here in a big way, and each of these things have marketplaces where you have to go in and either find a buyer and a seller, or even find a partner. So it is all very interrelated, and I think, yeah, things are going to look very different when you and I are grandparents. So
Yeah, I'm actually looking. I spoke to a guy who runs a digital marketplace, and he said something really interesting. And I'm looking. I actually wrote about it a while ago, but okay. So this is what he said. I found the quote. He said, "It takes a decade to make an impact on an industry, and another decade to transform it." And this is in terms of what's happening, with blockchain. Is he said, "I think we're about 3 years into that second decade."
oh, interesting. I'd love to see that timetable,
Yeah,
but
and
I guess we are. I guess, does it start at ATMs in the 80s? Maybe, I don't know.
yeah, I think, so this is, again, change has to come with change. So we just have to be prepared for some change. And I think that, in terms of like scalable, reliable solutions and all of that, we've seen that with SaaS, we've seen it with cloud, we're going to see it with financial services, we're going to see it with blockchain. It's inevitable.
I hate to ask, but can an MDA have NFTs inside?
Yes.
Okay. Yeah.
Yes.
I had to ask. By the way, NFT was an acronym of the week a few weeks back. So we can combine
Yeah.
those and put those together. Aren't we
So
smart?
I just had a journalist ask me some questions about NFTs, gifting NFTs. So I don't want to give away what that article is going to be like, but I got to do a little bit of a deeper dive into the NFT economy, the creator economy. So it was really interesting. But it takes a lot to gift something like that. You've got to, most of the time, you have to buy NFTs with cryptocurrency, typically Ethereum. You have to have a wallet. The person who you're gifting it to has to have a wallet. It's kind of like giving somebody a puppy. Back to you give them a lot of responsibility.
And that's so funny. So
Dogs
if
at
you
games
can't
seem to
get
be
that iPhone 13 for your kid, get them an NFT
right.
of an iPhone 13.
Yes.
I'm sure they'll be thrilled.
They'd be super happy. Yeah. I guess if my kids want something that's like really crazy expensive, I'll just get them like an NFT of it and just be like, here, but you own it.
By the way, do me a favor, get it on video if you do. I want to see their massive disappointment at that. So, hey, we've come to the end, but it's not actually over. We have a lot of work going on. We're coming up on the North American holidays. We are still working. What's coming up here, Mel?
Still working, yeah. Well, I think the biggest thing I'm excited about is AWS reInvent. I had some conversations with some of their financial services leadership this week. So there's some big things happening there. I'm excited to hear what's happening. That's a really for, I guess you've probably been to reInvent a million times, but to now really have all of the financial services part of it, that's exciting for me. So looking forward to that. And, then we just start everything, brand new year. It's like things are moving so fast, and I feel like things happen even faster during the holidays. But
yeah, the summer really flew. I'm off to reInvent, then off to Qualcomm's event in Hawaii,
that's a good
and
one.
then off, taking a couple weeks off for Christmas, and then I'll be at CES, all live. And it's
That's
amazing how many people have decided to go to CES in the past 2 weeks, just based on them asking, "Hey, are you going to CES? Are you going to CES?" So yeah, I'm going to go
yeah.
to CES. Not the most most favorite show out there because prices are jacked up all the
Mm.
time, but I got my hotel room for about 50% off of what I normally pay. So
Wow.
yeah, I don't know if there's a lot of fintech going on at CES, but if there is, you might want to consider coming out there.
Yeah, I was thinking about a couple of days, maybe 1 or 2 days. I think the 2020, when it didn't happen, was it 2020 was the first year that didn't happen, was the first year I hadn't been in like maybe 17, 18 years.
Wow,
So it's always a good show to be there for a day or two, but
good stuff.
can Vegas can wear you out. Got to be careful.
So
But yeah,
we are at the end
yep.
of our show here. Mel, thank you so much for being so fintech smart and to balance out my fintech dumb. I appreciate that. But I want to thank everybody for tuning in. We love to get feedback. You can find us on Twitter. Tell us good things, tell us bad things. Maybe even give us some topics for another time. Mel, you keep promising a guest, a woman in
I
fintech,
know.
and
You
I
know what?
just keep waiting and waiting. Come on, we need to do
You're
this.
so right, and you're totally right. And thank you for calling me out on that because I have been trying. I haven't been trying hard enough, and I actually do have somebody in mind who can talk to us about NFTs.
I'm in.
And
Let's get this thing going here.
she is whip smart. So I will. I'm gonna. That is going to be like my primary to do before next week.
Excellent. So thanks for tuning in. Have a great weekend and talk to you in a couple weeks, maybe 3 weeks. We'll see based on the holidays. Take care, everybody.